Good morning. Predicted Trades family. Hope everybody's doing well. Looks like the market had some fun overnight. And we're dealing with our little gap up here. Let's see. Looks like NQ's trying to lead the way to the upside, up 0.8%. YM lagging a little. Not surprising. As we like to teach, NQ loves to lead to the upside to the downside. So, quick review of yesterday. Hopefully that everybody can kind of see we were in this downtrend, but then yesterday's pre-market started that reversal, right? And all you had to do was kind of draw a trend line from the pre-market action lows. And you can see cash session, we held that, took off from it to squeeze tops, slapping the daily mean. That's when we were locking up our longs and going short back to that trend line. And then it's set up for a late day long again. Overnight, we continue to hold that trend line and push up out of our range that we've been stuck in for the last couple of days. And now we are back above the daily 21 and that key level 4165. So today actually gets pretty easy. We've fired our squeezes that were containing us, right? And we fired them to the upside. If anything, this midday drop that did not get back near lows should have been a huge key sign, especially after Tuesday's action, where we did the same thing, got up to the mean, but then sold off for new lows on the day. So yesterday, this hold and push back up near highs was a huge sign that market wants to try to keep going up versus heading down again. So, what do we have in store for today? Real quick, let me pull up that economic calendar. And today, being Thursday, we have our jobless claims, and then we have some GDP data coming out at 8:30. So in the middle of this prep, we'll get an idea for what that data looks like and what the reaction might be. Tomorrow we do have a whole bunch more economic data coming out, and we have Powell speaking at Jackson Hole at 10 a.m., plus the University of Michigan data coming out. So what do we have in store for today? Well, you can see the trend line that started this little sell-off, the highs from last week, creating a resistance trend line above. We have our trend line from yesterday and overnight carrying us up. So today becomes kind of easy. Ideally, we need to hold 4165 and the daily mean. They're creating a zone of support. Now that it was resistance, now that we are above it, it needs to become support. So we need to hold this zone. I would allow a slip of this trend line from lows, just enough to tag that daily 21 and then get back above. If we start to lose this trend line from lows and we slip the 21 and we can't get back above and we start, rejecting the 21 or the midpoint of this range, then the most likely scenario is quickly coming back to this 4136 that we chopped around And if that were to continue to our zone below, which we did not quite tap, that's just talking about a breakdown of this gap up. But if we can hold the 21, this 41.65, this zone of support, and get trucking through this little resistance right now at 41.72, obviously trying to get to this zone above that we stopped at, the daily 8, and push past that to 42.05 where the daily 15 sits, and the trend line from last week's highs that started the sell-off. Luckily we've got a nice 40-point range here that could contain us for today, leading into tomorrow with Jackson Hole and everything. But we'll have to see what we can get, if we can hold this zone, if we can start to push up through the daily 8 to get to 4200 psych level and 4205 and that daily 15 above. That is getting close to our gap and go that we had to the downside. And filling that gap would be getting back to about 4220, about where that daily Keltner is. And if we really filling the gap is getting more like 4230. We're only up 25 points on a 65-point ATR, so we still have plenty in the tank. And, about 40 points up from here does get us over 4,200. So if we talk about ATR, it's really just getting back to this 4205. That's kind of the full ATR. It's in the vein of continuing up and recovering. Would love to see us get up to this 4205 today and close above our zone here at 4190, close above that daily 8 to set up for a Friday continuation higher. But anything can happen with that economic data that's coming out in a minute. We could easily dump through our zone and be back down here. So we'll have to gauge it as it comes up, but we have our downside scenario. We closed around 47, so 60 points down just gets us, a little bit below 4,100. So as far as an ATR from where we closed, 4205, 4087, we'll have to see how we do with this economic data. If we start to break this structure that's been carrying us up, we'll have to see. On to NQ. NQ got down near that first Keltner below. But on a nice uptrend, you could also draw your trend lines on NQ, but I'll skip it for now. Just like we had on ES, worth drawing your trend lines from lows that are carrying us up so we can start to see that break of trend if it happens. Now that we are above 13,000 big key psych level, we need that to be support to carry us into these trend lines from highs. Yeah, I guess I'll leave. It's going to get rid of one of them, but it at least created a down channel. We broke out of it. Now those trend lines both kind of sit right at the daily 8 and at our 13,150 key level. So for NQ, let's see if we can hold 13,000, push through the daily 21 in an effort to get back to the daily 8 and this 150. We got a nice zone above here as the target. That 220 kind of marks the beginning of the gap down. Filling the gap would be getting about to 250. Let's see, we've got 100 points up on 280. We can go another 180 from here. So yeah, we can get close to that 200. We could and that 220 on an ATR. And then if we break our trend line that's been carrying us up, likely quickly coming back to 12,900. And if that can't hold the bottom of a 4-hour squeeze, which sits at 12,800, where that daily Keltner is. So we slipped through the mean, we fought back to the mean. We'll have to see how the reaction on the GDP data goes. But if it's negative, we're going to push off of the mean and likely get down to that first Keltner down. If our reaction is neutral or positive, we are in an uptrend. We don't want to fight that trend, so we'll carry it up to moving averages and key zones above. On the ready, talked about yesterday. If we're going to see some upside, we'll likely fight up to this 1941, which was the high from Monday and pre-market high. High from Tuesday and pre-market high on Monday. As you can see, we got right up to that, pulled back to the daily 21 and held. Now we're pushing above that 41, looking for that to be support. You know, we could slip that trend line from lows just enough to tag that 41 and bounce back up. But once we start losing that 41, likely back to the 21, likely back to 1920. And if the reaction is negative and we're going to reject our moving averages, the bottom of that daily squeeze down there 1905 and that psych level 1900. But if we can hold 1941, looking for us to push back up to this 1969. We closed around, I'll just call it 35 on a 40-point ATR. Yeah, we can push right on up to test this trend line from the highs of last week. No problem. You could draw a less aggressive trend line that looks like it would be connecting. Let's just see real quick, sorry. Yep, there you go. So, let's see on ready if it can get through first trend line to get up to second trend line, which would be getting above that daily 15 and daily 8. All in a bid to get back to this daily 200 above and 2000, fully recovering from that sell-off. And not saying that that happens today because that'll be slightly outside of an ATR. But if we have a good update today and continuation Friday, it's a goal to get back to 2000. YM. There we go. This 32,900. Very important level and provided support yesterday for us to get up above 33,000 and tap the mean. We fell back below but held that 900. Now we're back above 30,000 and the mean. So looking for that to hold. 33,000, big key psych level, and the mean should provide support. We'll see how the economic data goes. If we can hold there and start to push through this high from Tuesday pre-market at around 33,175. If we can get through there, then looking to get up to the daily 8 and daily 15, making a zone above and kind of flanking that 33,300 psych level. Let's see, we've got 400-point ATR up about 100. So from here, yeah, we can get up to the daily 15, which would be getting back to that high from pre-market. I mean, obviously we'd be pushing a little bit further to get to that. But yeah, first goal, that 33,300. If we can get through the daily 8. And next goal, getting up to that daily Keltner. If we break down and lose support, back to 900, and if that can't hold, 800, and then on our way through this low, it'd be to 32,600 at that first Keltner down. Apple. Apple wasn't the strongest yesterday necessarily, but it did hold above 167. If you mark 167, you'll see it's trying to provide support every single day. We did slip below it just a little. You can see this wick pretty much came down to test it. If we start to lose our support and our uptrend, likely coming down to that 167 for a test. Through that, we'll get to the daily 21 at the bottom of these squeezes at around 165. But if we can continue and hold above that 167, 168, first goal is 170. You can see we almost got there pre-market. And through 170, our zone above, which gets us back above the gap down. AMD. So as you can see yesterday, AMD was trapped between key levels. We had this 1991 right in the middle. We had this 19.82 below that we almost tapped. And we had this 90.82, this 91.91 in the middle, and this 93 above. You can see we slipped down to our key level, back up to the top, but closed pretty strong. Draw your trend line from the lows. Let's see if we can carry through this zone that was resistance and used to be support. If we can get above it and turn it back into support, it's all in an effort to get to the daily 21 and daily 8 above, which will be near 95, and a key level at 96. If we give up our support and start to roll back, going to retest these levels, and if we fire to the downside, we've got a daily squeeze right down near our next key levels. Amazon was decently strong in the morning, got up to the daily mean, and came back to take a break. Now gapping above that daily mean. So like other names, looking for that daily mean to hold us around 135, start to send us back up to the daily 8 at 137, and 139.5 where the daily 15 and that first Keltner up sit. And 140 key psych level, it used to be support last week. So that's what we're going to try to fight up to. BA was decently strong yesterday, fighting back into our zone and holding it. I just want to try to emphasize, when I mark key levels, it's worth marking them on your chart as well, because they can be a ton of, it can definitely provide a roadmap for you. Yesterday, we fought up to the key level. We pulled back to the one we tore through for support. It became support. So we push above what we resisted, and now it needs to be support. So in BA, very simple. We have the daily 21 and 8 right in this zone, looking to hold it, push off to that daily 15 and that first Keltner up. If we start to lose this 63, we're back into the zone. If we lose a 62, we're falling back to 160, 158. Cat. Was definitely strong in the morning, but we got up to highs from even before this. Come on. The sell-off that happened last week, right? Set a new high above that, so we should always expect sellers to step in. And boy, did they step in and pretty much engulfed the previous day, but look at what we held and closed above. Gapping up slightly. So the daily 8 and our key level need to provide support for CAT to bounce and get back up to 197 and continue that journey up to 200. If we start to give out this 93, then we're coming back to the lows of this sell-off, which is where the daily 21 sits now. On Google, down at the daily 50, fought up to it yesterday, fell below it, and then it kind of was resistance, right? Now we're gapping above it. Not loving this wick down, but if we can hold that daily 50, start to push through yesterday's high, pre-market highs, we're trying to get back to the daily 21, daily 8 above, just above 116. If we start to lose our structure and 114, likely coming back to 113 at the lows. GS. Finance was very strong yesterday. GS took off from the mean and then held VWAP on the pullback. So very bullish, looking strong. Gapping up a little bit here, around 344. So going to be opening near yesterday's highs. We've got the daily 8 and 15 above. We've got the daily 200 and 21 below. If we can't get through the 8 and 15, we're likely just going to come back and bounce around these moving averages. Well, let's see if we can get above 345 and a half. That first Keltner and try to chuck up to 348 where that sell-off gap started. Even JPM, decently strong yesterday, higher lows in an uptrend off of that daily 50. Obvious goal to get back to the 21, 8, and 15 above, all flanking 118, which gets us back to that gap. Beyond that, looking to get to that first Keltner at 120, but likely a 2-day journey. Meta. So, Meta, like I said in prep yesterday, not really wanting to play it, but it'll be a good sign if it can break through this resistance for the market. We got through that resistance, so it pointed to upside potential in the market and held above its VWAP on the pullback, so another bullish sign. If we can continue today, stay above that VWAP there at 163. If we have a pullback, looking to hold there and then get back through yesterday's high, get through 166 on a journey up to that daily 50 and daily 8, which will be sitting around 167 and a half. Beyond that, we've got psych level 170 and the daily 21. Microsoft. Kind of like Apple wasn't the strongest yesterday. But let's see, now that we're starting to push higher, if they want to rotate into it. First goal being the 280, where the daily 21 sits. 283, where that daily 8 sits. But if we roll back over, coming back to 276, 275. Netflix. Nice strong day yesterday, and look at that. Through one trend line from highs to the next trend line from highs, and now we're starting to break through. Got back above the 21 and kind of held it. If we have a dip, looking for that 230, that daily 21 to hold. And if we can continue through yesterday's highs around 234, that daily 8, next stop 238, where that daily 15 is, and about 240 where that first Keltner sits. NVIDIA had its earnings report. Negative reaction. Down their second Keltner. Let's see if they snap this right back. I don't really want to play it long until it's back above that earnings drop. We could fight up to that and reject back down. We already knew they were going to have bad guidance because they released early a little bit. So, we'll see what we get on NVIDIA here. Not loving the setup. QQQ. Got our key zone here. 316.25, 317.75. Now the daily 21 sits right at the top of that zone. We've kind of already tapped it and pulled back from it. Draw your trend line from lows to see if they can hold. Not loving this wick. We have economic data coming out in a couple minutes, so let's see if we can stay up here. Stay above this wick. Hold our zone. If we can hold this zone and start to push through pre-market highs, looking to get back to 320 where the daily 8 sits, and back to this trend line from the highs of last week at 322. If we start to give out this zone, even pre-market, likely coming right back to 315, and below that, 313 and 311, which we did not quite tap. So if we start to have a negative reaction to GDP data, likely coming back to here as the downside target for today. Roku, didn't do anything. Not going to touch it. Shop. That was quick, right? Shop. Barely did anything. Compared to other things, popped up, tried to hold VWAP up near yesterday's highs. So if market gets moving, likely coming back above 35, that daily 8 and daily 50 sit. Through that, 36.25 where the daily 21 will be sitting. But there are way better names out there to be playing. Snowman. Oh, like I said, probably going to ramp into earnings and get back to the 21. That's exactly what she did. Up huge on earnings and still trying to push with this gap up on the market. We shot from the mean up to third Keltner. So on this one, I'm not going to chase it. We've seen so many gap ups on earnings that fade back for a day or two before going again. So probably going to let this one chill. I'd say if anything, these previous highs around 180. Yeah, I'd be looking for it to come back and hold 180 and then start going long off of it. But great reaction on snow. Not sure if anyone in here swung it. On to SPX. It is 8:30. We're starting to have that reaction. Starting to break our trend line slightly. Let's see if we can get right back up before open. To me, negative reaction means not just giving up this trend line, but like dumping below 41.50 back to these 41, 42, whatnot that we've been struggling with. Already trying to wick back up. So Not such a bad reaction so far. Just a minute in, but SPX going to be opening up near 4160, so above these highs. These squeezes should start to open up and fire, just like they did on all of the indices. The lower time frame squeezes all fired. So on SPX, going to be having a little gap up. Let's see if it can hold the gap. If it wants to come back and fill, it'll be 4140. So just like on ES, the 4142 that we've been struggling with would be coming back there to fill gap. But let's see if we can leave the gap in our dust and keep trucking up to next key levels above where the daily 8 sit and that psych level of 4200. We do have that gap down that starts right near that 4194. So we could just run up to that and wait before filling it maybe Friday. GDP and unemployment better than forecast. Nice. I like it. Still, somewhat holding structure. Still decent to the upside. SPY. And on SPX, I didn't cover downside, but it's going to be the same as ES. We're going to slip back into the zone and maybe go test the bottom if we reverse this uptrend, right? On SPY. Let's just go ahead and draw. We're slipping our uptrend from all of these lows, but if we go extreme, we're not. So I'm going to leave SPYs off of those wicks, unlike on ES where I kind of connected all of those lows, because we are slipping that a little. So let's see on SPY if yesterday's highs, this trend line, can hold us up, maybe slip it enough to tag 414 and then keep going. But we could just hold up at yesterday's highs around 415 and start that journey up. Looking to get to our key zone above that we already tapped pre-market. The daily 8 will be sitting in there as well. Might even be a little below it. So that's a target to the upside. We got our resistance from last week's highs. And if we can get through that, this 419.5, where that first Keltner is going to be sitting. Square. Holding the daily 50. So if market can recover, not a bad play. Back up to the daily 21 and this key level, which are making a zone from 78 to 78.8, which gets us back to the gap. And dear old Tesla. Tesla. With its split, it's already split pre-market, so everything's adjusted. We're now at 300. Strange little gap up there. So let's see. Let's see if she can hold 300. What used to be 900. Start the journey up to that next Keltner above at the top of this daily squeeze back at these highs. Post split. Or if she's just going to come back and settle at these moving averages. But if market's going to continue uptrend, basically 307.5 first stop on the way to 314-ish, right? If we start to roll over back to these moving averages, and if everything's going back to bottom of squeezes and lows of the week, then likely coming back to the 21 at 290. Ooh, I do want to take a quick look at UVXY. Because on the sell off, she got strong up to the mean, but rejected, rejected, rejected. Good sign for upside in the market, and that's what we got. Now that UVXY is below the daily 15 and 8, right at around 9.5, would like to see us stay below 9.5. Get us back down to 9, and through it will provide a lot of upside for the market to get back to the highs that we had last week, right? But if we start to break 9.5 to the upside and get through this daily 8, then we are going to see the market rolling over. So definitely keep an eye on that 9.5 for UVXY. And VIX got down through that 23.3 yesterday. When we got back to it, rejected, setting up that afternoon drive that we hit. Gapping down, but kind of back to where we closed already. So not much of a gap on VIX. If we're going to see upside in the market, we need to see VIX get down to 22.5. Give out 22.5, get back to the daily 21, right near 22. Which would be starting to fill this gap. So definitely mark your gap. I'm just going to put a price level rather than mark the whole thing. So if VIX can take out these key levels around 22.5, making, it's a zone of support. If we get there and VIX is holding it and bouncing, then we might not intend to fill this gap and we could see the market roll over. But if we can get below this and reject it, then we are getting into gap fill where VIX can drop down. First stop 22, 21.5, and then the daily 15, which is back at the highs of the previous week. But if we're going to roll over, we're going to get back above 23, make our way through 23.3, 23.5, on our way to 24. And the daily 15 and 200 above at 24.5. We kind of already tagged those in overnights from Wednesday. So let's see if this downtrend on VIX can hold and send us lower. Trying right now to defend 4160. So hopefully this is helpful for everybody. Thanks for tuning in. It is free day in predicted trades. So definitely come join our server. You can trade with us today for free and the rest of our members. And yeah, good luck today. Remember, no beast, no feast.